An estimated $200 billion US has been wiped from the value of cryptocurrency around the world as a run on the most popular coins followed the collapse of one investment that was never meant to fall. Let's bring in our business editor, Ross Greenwood. Now, Ross, good morning. Is it possible to explain in simple terms exactly what's happened here?
Well, I'll do my very best for you, Pete. So just to explain, we know Bitcoin, it's a virtual currency. Ethereum is very similar. There's Litecoin, there's a number of others. But there was one that was created which was called TerraUSD. Now, TerraUSD was quite different. It's what's known as a stablecoin. And what you can see here on this chart is literally that flat line at the top. It's supposed to mirror the US dollar. So in other words, one stablecoin, one of these stablecoins equals $1 US. And the idea was if you sold your Bitcoin or your Ethereum, you go and buy these instead, rather than actually converting it back into actual cash until you were ready for your next transaction. So it's always supposed to be $1 US. But you can see what's happened here. At one stage, that in the past few days, this TerraUSD has got down to 23 US cents. It wasn't expected. It has spooked the crypto markets around the place. So if we go and have a look at what's happened to Bitcoin, say, for example, and the same thing's happened to Ethereum and the rest of them, you can see this big fall that's happened over the past month. So Bitcoin down about 55% during that period of time. At one stage last night, down below $26,000, when only a week or so ago, it was up around $42,000. So big falls, big losses have taken place as a result of what's taken place with that TerraUSD.
Okay, so how can anything that's supposed to track the US dollar just stop doing that, Ross?
Well, it's what's called a good old-fashioned run. In other words, what happens if you suddenly find that enough people want to sell it and really attack that, then if there's not liquidity, there's not enough others on the other side of the transaction to hold it at that $1 US peg, then the price inevitably falls. And that's the reason that spooked the markets. Now, the boss of this is a South Korean fellow. So his name is Do Kwon. He's a bit of a rock star in the whole crypto area. So I just thought we'd pull out a grab from him last year about what he had to say about this and also about the regulators, the US regulators, looking closely at what he was doing. Here he is as a part of a video podcast.
I mean, security laws exist for a reason, right? So one of the things that the crypto industry gets a lot of criticism for is there aren't like a set of rules that govern what types of projects are absolute scams and what projects are not. So
Right.
Retail investors are just sort of left to their own tools to determine what is a scam and what is not. And in sort of like a fast-moving, forward-looking type of industry, that's really, really hard to do.
So the authorities right now will be trying to work out whether this is a scam or whether it's not, or whether it's something that's simply gone badly wrong. Now, Do Kwon has been on Twitter. He's vigorous there as well, like so many people are. And overnight, he's basically come out and said, well, we'll be back. It's an interesting thing he's come out with. You can't quite pick it out, but he effectively says there, we're here to stay and we're going to keep making noise. As I say, you can see there, he's the master of stablecoin, the Luna, as they call it there. So it's just a fascinating thing to see, Pete, that this is an area that a lot of people won't play in, but it's certainly important because it does have an impact on the broader markets.
Okay, and does it have anything to do with the fall in the broader stock markets around the world, Ross? Spooked that there could be a recession around the corner here. We're talking about the R word again, not just for the US, but the global economy too.
Yeah, well, that's right. And it's a real thing. And remember that if people are taking their money out of any investment, then it can have an impact on the rest of the world. And one small thing is, say, for example, a lot of highly leveraged people with margin loans, in other words, lending against their share portfolios, if those shares are going down vigorously and tech stocks have plunged, I mean, Atlassian's one good example of down more than 50% just in the past few months. You have a look at, say, I don't know, Netflix down by more than 70% in the past 6 months or so. So that's an interesting point. But a former head of the US Commodity Futures Trading Commission, he basically says at this stage, they're not necessarily linked. Have a listen.
I would say that at this time, the market for such stablecoins and really crypto more generally is too small to pose a systemic risk to the traditional financial system. If we were having this conversation 2 or 3 years from now in the future, and crypto or stablecoins made up a much greater portion of economic activity in the world, a precipitous drop or the implosion of a stablecoin like TerraUSD could pose a systemic risk.
And what about the markets here today? A lot of investors this week, Ross, have been sort of peering through their fingers, not wanting to have a look at how much damage that there's been. Absolutely hammered for the past few weeks since that surprise inflation figure came out
Well, that's the big thing. Now, just to explain this, what's happening here is if you had a look yesterday, the so-called WAC stocks, so this is WiseTech, this is also the old Afterpay as a part of that, Altium, but Afterpay is now called Block. It fell by 16%, and also Xero. So, you know, even though it went into loss and basically it gained a number of subscribers, the share price was hammered. So those key tech stocks in Australia have been absolutely punished. And the reason partly for that is if interest rates are going to rise, as it's imagined clearly they will significantly, then all the valuations of all companies become technically worth less in the future because of higher interest rates. And that's the reason why they're being hammered. Now, at the opening today, it's expected to be a little calmer than it has been in the past few days. But do remember that the ASX 200 has lost around 8.5% just in the past 3 weeks. And that is a pretty significant fall. The correction is 10% in the overall market. So these are pretty decent falls. And until really you see either any relief coming out of Ukraine or out of China, that volatility is going to remain.
All right, Ross Greenwood, appreciate all that as always. We'll talk to you again soon.